We want to get your views on metals, we want to get your views on FX, but let's start with central banks then, given we've just been talking about the inflation dynamics and the divergence between what's happening in France versus the US. But I want to start on the RBA and what Guy was saying. Australia clearly has an inflation problem, and they were the first major bank to hike rates in 2026. Is that an Australia story, or should we read more broadly into central banks having to adjust to a higher inflationary story?
I think there is an element of needing to adjust, but in terms of central banks actually following through and delivering tightening, I think the RBA is a little bit of an outlier at this stage. So, heading into 2026, there's speculation we could see the ECB hike, we could see the BOC, we could see the RBNZ. ECB has actually, gone the other way. It's looking at, its strength in the euro. That's actually more of a dominant factor. BOC, I think there's more of an argument to be made that they could tilt in a dovish direction, and it still remains to be seen with the RBNZ whether they'll follow through. And then, so I think, within G10, FX and central banking, RBA is more of a truer hiker now, and traders are also rushing to price more tightening. Yes, you've already got the BOJ, they have tightened policy, but we know from a yen perspective, if you're a trader, fiscal forces are more dominant, and if it's to get a move higher in the yen, it's not going to be because the BOJ are tightening policy, it's going to be some level of intervention or the prospect of, which is going to be guiding price action.
Is the gold and silver trade back on?
I'd be hesitant to say back on, but I still think the structural bull case for gold does remain in place. Obviously, we saw some pretty aggressive selling on Friday, and it looked as if we could see more of the same yesterday. I think we've seen some, the retail hands shaken out. Has attracted a lot of wider participation than you typically see, and I think some of the moves that we've seen has probably caused cause for concern, and some of those retail flows will probably limit and reverse. But the bull case, we want liquid alternatives to the dollar, central bank buying, physical demand. That remains in place for gold. I just don't think we'll necessarily see the parabolic rises that we've seen, and there's going to be more two-way risk, and any move to the upside in gold isn't necessarily going to be as linear as it has been previously.
OK, and where do we stand on Kevin Walsh now? Because we've spent the last 2 days asking a lot of questions about what he will mean, and probably getting very few answers about what he will mean at the Fed, about how hawkish he'll be versus his commitments to President Trump to cut interest rates, or at least his statements recently that he would be minded to. His views on QE, maybe that pushes a steeper yield curve, but is he going to be actually data dependent when he arrives? So many questions, I suppose, and we don't have many answers.
I mean, we could do a whole show on this, but in terms of the top line summary, yes, we saw a hawkish reaction initially because previously he's been an inflation fighter, and that still remains the case, but ultimately he doesn't necessarily see the risks of inflation as present as he did in 2008. He thinks AI will help productivity, higher productivity equals lower rates. But ultimately, from a market perspective, in the short term, I think it's more of a case of status quo, and continuation rather than revolution. Here's just one vote. We've seen the Fed regional governors reappointed, and so there's only so much he can do. I think going forward, what's more interesting is how he actually, alters broader policy at the Fed. There's been some suggestions that he wants, less communication from Fed officials, which, if you're, trading those events, that suggests there is an element of high volatility which could creep in further down the line, particularly if they're tightening the balance sheet. That's another thing for the market to ponder. And then also, if you're getting less communication from Fed officials, you're relying more on data. But as we've seen, at the end of last year, and with the BLS report cancelled on Friday, we're not getting as much data potentially as we could do. So I think higher vol potentially, towards the back end of next year is possible.